Hey everyone, and welcome back to Talk Tickers.
Yeah, it's great to be back.
For another deep dive into an earnings call.
Yeah.
This time, we are looking at GrafTech International from their Q3 2024 earnings call.
Yep.
Ticker symbol EAF.
EAF.
And if you're not familiar with GrafTech International,
Right.
They are a leading manufacturer of graphite electrodes,
Yeah.
which are used in electric arc furnace steelmaking.
That's right.
And as you may or may not know, the global steel industry is in a bit of a cyclical downturn.
It is a downturn.
So demand is weak.
Weak as demand.
Capacity utilization is low.
Yeah.
Which is putting pressure on companies like GrafTech.
Putting a lot of pressure.
So what we're going to do today is see how GrafTech is navigating this challenging environment.
Okay.
See what their strategies are.
Yeah.
How they performed financially. See if they're going to be able to make it through this and thrive.
Right.
Potentially.
Yeah.
And we're also going to talk about this interesting $500 million financing transaction they announced.
They did.
So let's get into it.
Let's dig in.
So first up, let's talk about sales volume.
Okay.
GrafTech.
Yeah.
They reported a 9% year-over-year increase in sales volume. Which is interesting.
Yes.
Given the fact that a lot of other companies in the industry are actually seeing their volume shrink.
Yeah, they are.
So what do you think is driving this strong performance?
Well, I think one of the key takeaways here is their customer relationships.
Okay.
And how they've really focused on that. So they've taken this customer-centric approach. Remember a while back they had that Monterey plant shut down?
I do.
Big setback?
Yeah.
Well, they're actually winning back that market share they lost during that time.
So how are they winning back customers?
I think it goes beyond just like price cuts.
Okay.
They're providing tailored solutions that address the needs of their customers.
So it's like a real value add.
Exactly.
Not just transactional.
It is.
Yeah.
They've also been strategically expanding their product line.
Okay.
Successfully tested their new 800 millimeter electrodes, which puts them in a great position to tap into that niche market.
Right.
And that niche market is projected to grow faster than the overall electrode demand.
So they're playing it smart?
They are.
Okay, so they're growing sales, but are they keeping costs under control?
Right.
That's the big question.
It is a big question.
Because if they're not keeping costs under control, they could be selling a lot. But if their margins are shrinking, it doesn't really help them.
Not going to help.
So what are we seeing on the cost side?
Well, they managed to cut their cash cost of goods sold by 28%.
28%
year over year.
Wow.
That's a huge number.
That's big.
Yeah.
How are they doing that?
Well, they've been very focused on streamlining their operations.
Okay.
So they've diversified their supplier base, brought in some new vendors, optimized their procurement strategies, and then also implemented some process engineering improvements.
So basically squeezing every bit of cost savings they can out of the business.
Yeah.
Are these cost-cutting measures impacting their ability to serve customers?
It's a good question.
And also invest in their business?
It is.
Because sometimes companies can cut costs too much.
They can.
And then they end up hurting themselves in the long run.
Exactly.
So what do we see here?
Well, GrafTech has said that even with this cost discipline, they remain committed to investing in the business and meeting their customers' needs.
So they're trying to do both. They're trying to cut costs, but they're not trying to hurt the long-term prospects of the business.
Exactly.
Okay.
All right.
Let's move on to this intriguing financing deal.
Yeah, this is interesting.
They just announced a $500 million transaction.
$500 million.
Which more than doubles their current liquidity.
Yeah.
So can you break this down for us?
Sure.
What exactly is going on here?
So it's a multifaceted approach.
Okay.
But they're essentially bolstering their financial foundation.
Right.
They've secured a $275 million delayed draw term loan. That's basically a line of credit they can access if needed, like a safety net.
Gotcha.
They're also offering to exchange existing bonds for new ones with extended maturities.
Right.
So that pushes out their debt deadlines.
Gives them more time.
Exactly, more breathing room.
Okay.
And then lastly, they've secured a new revolving credit facility. So another flexible borrowing tool.
So basically shoring up their defenses.
Yes.
Giving themselves optionality.
Optionality.
What does this mean for GrafTech in the bigger picture, though?
Well, I think it sends a strong signal.
Okay.
First, it demonstrates they're being proactive about managing their finances, especially during a tough time.
Yeah.
It gives them the resources to handle any turbulence.
Right.
And maybe capitalize on opportunities as they come up.
So they're not just sitting there.
No, they're not.
They're taking action.
Taking action.
Now, it also buys them time.
It does.
Reduces the pressure to meet debt obligations.
Right.
So they can focus on the long term.
Yeah, the long game.
And then lastly, I think it instills confidence.
It does.
Because lenders wouldn't be giving them this money if they didn't think that GrafTech could make it through this.
Exactly.
And come out stronger on the other side.
A vote of confidence.
Yeah, for sure. Okay, so despite these industry headwinds, it seems like GrafTech is taking some pretty decisive steps here.
They are.
To survive.
Right.
Position themselves for future success.
Future success.
What makes them so confident about the future of the industry, though?
Well, the near-term outlook is uncertain for sure.
Right. But they are banking on some long-term trends.
They are.
That are going to reshape the industry.
Big trends.
So let's hear it.
Okay.
What are these trends?
So the biggest one is decarbonization.
Okay.
So governments and industries around the world are trying to reduce their carbon footprint.
Right.
And that's driving a shift to electric arc furnace steelmaking, which is much cleaner.
And remember,
yes,
GrafTech makes the graphite electrodes that are used in
they're essential
EAF steelmaking.
Yeah.
So this is right up their alley.
Right in their wheelhouse.
And it's not just talk.
No.
Because there are 200 new EAF projects in the pipeline.
Wow.
Globally.
That's a lot.
With over 170 million.
170 million.
Metric tons of new steelmaking capacity.
Wow.
Expected to come online by the end of the decade.
That's massive.
So that's a huge potential market for them.
Huge market.
But wait, there's more.
There is.
We can't forget about petroleum needle coke.
Oh.
Which is the key ingredient.
Yeah, it's essential.
In graphite electrodes.
It is.
And here's where things get interesting.
Okay.
Because petroleum needle coke is also in high demand.
It is.
For electric vehicle batteries.
For EVs.
Which is another rapidly growing market.
Right, another big one.
So the demand for needle coke is skyrocketing on two fronts.
Two fronts.
EAF steelmaking boom.
Yep.
And electric vehicle revolution.
EV revolution.
Which means prices are going up.
Prices are going up.
Which brings us to GrafTech's vertical integration.
Right.
They produce a lot of their own.
A lot of it.
Needle coke.
Yeah.
So they have some protection.
They do.
From those price fluctuations.
They have protection.
And potentially a competitive advantage.
It's an advantage.
But they're not stopping there.
Oh, no.
They're also looking at expanding their needle coke production to serve the EV battery market.
EV market,
So it seems like they're not just riding one wave.
Two waves.
They're riding two waves.
Steel and EVs.
Steel and EVs.
That's powerful.
Powerful combination.
Well, it is.
And they're doing this by focusing on their Seadrift facility.
Seadrift facility.
Which produces a high quality petroleum needle coke.
Yep.
That is perfect.
Yeah.
For EV battery anode materials.
That's right.
So this is a diversification strategy. It could unlock a lot of value.
Unlock value.
For GrafTech.
For GrafTech.
And potentially make them a key player.
A key player.
In the EV ecosystem.
Absolutely.
So it's clear that GrafTech, they're not just reacting to the current market conditions.
Yeah.
They're trying to shape their future. They're taking decisive action.
Decisive action.
To control costs.
Control costs.
Solidify their financial standing.
Yeah.
And position themselves to capitalize on these big industry shifts.
Industry shifts.
It's a bold strategy.
It is bold.
But it seems like they're well equipped to execute on it.
That's right, they are.
What do you think stands out to you from all this?
You know what I find impressive is their ability to balance the short-term pragmatism with their long-term vision.
Right.
Yeah. They're tackling these immediate challenges while simultaneously making strategic moves for tomorrow.
Right.
So they're not just thinking about today, they're thinking about the future.
The future and how to win.
And that's what it takes.
It is.
To be successful in the long run.
Long run.
You have to be able to do both.
You do.
Okay.
All right.
Now for our favorite part of the show.
This is it.
This is not financial advice.
This is not.
But after taking this deep dive into GrafTech, I'm feeling bullish.
Bullish.
What about you?
Well, I can't offer financial advice either, but I'm intrigued by their potential.
Okay.
Their aggressive cost cutting is already yielding positive results on their profitability.
Right.
Their recent financing transaction eliminates those liquidity concerns.
Right.
Gives them ample runway to execute their plans.
Plenty of time.
And then, of course, there's that massive long-term growth potential.
Right.
We talked about.
From both steel and EVs.
And EVs, yeah.
So it's like they're hitting on all cylinders here.
They are.
They're not just cutting costs.
Oh.
They're positioning themselves for a future where the demand for their products could go through the roof.
Skyrocket.
And I'm surprised that the market hasn't really recognized this yet.
Yeah.
But that's why we do what we do.
It is.
We try to find these opportunities.
Find the opportunity.
Before everyone else does.
Before everybody else.
But of course, this is just our analysis.
It is.
This is based on the information we have today.
So
make sure you do your own research.
Always do your own research.
Before making any investment decisions.
Absolutely.
But sometimes the boldest moves
lead to
the biggest reward.
The biggest rewards, that's right.
Yeah. We'll see what happens.
They will with GrafTech.
With GrafTech, yeah, it'll be interesting.
It really is fascinating.
It is.
And this whole move into the EV battery market, I wonder how that's going to change the graphite electrode industry.
As a whole.
Yeah.
I think it could be a game changer.
Okay.
You know?
Yeah.
GrafTech is kind of leading the way here.
Yeah.
And so other companies are going to have to decide, do they follow suit?
Yeah.
Do they double down on
their core business?
Or do they try to branch out? Which brings me to another point.
Okay.
How do you think this diversification might impact their relationships?
That's a good question.
With their existing steelmaking customers.
It is a good question.
Because some of those customers might look at this and say, wait a minute.
Yeah.
You're getting distracted.
Right. You're going after a new market.
Yeah.
Are you still going to be committed?
Right. Are they going to be there for us?
To us.
Yeah.
To steel. So I think it'll be important for them to communicate clearly with their customer. And make sure that they understand, hey, we're not abandoning you.
We're still here.
We're still here for you.
Yeah.
This is just an additional opportunity that we think is going to be beneficial for everyone in the long run.
That's right.
And speaking of stakeholders, we can't forget about the investors.
Right.
What message do you think these strategic moves send?
I think it shows that they're not just reacting to market forces.
Right.
They're shaping their own destiny.
They're being proactive.
They are. They're committed to long-term growth.
Right.
They're willing to innovate, and they understand their industry.
So they're checking all the boxes.
They are checking the boxes.
That investors like to see.
Absolutely.
It's like they're saying, hey, we're not just surviving.
Right.
We're using this downturn as a springboard. To launch ourselves into a new era. Of growth. So as we wrap up this deep dive.
Into GrafTech.
What are your key takeaways for our listeners?
So for me, there's three major takeaways.
Let's hear them.
Okay, first, GrafTech is showing a lot of resilience in this tough industry environment. They're not just cutting costs.
Right.
They're optimizing their operations.
So they're doing it strategically.
Okay. Second, they're not afraid to make bold bets on the future.
Right.
Like the EV battery market, they're staying ahead of the curve.
They're not just sitting back.
Yes.
And waiting to see what happens.
Exactly.
They're going after it.
They are.
And then third, they're sending a clear message
to investors
that they have a plan.
And
they're executing on that plan.
They are.
So it's not just talk.
It's not just talk.
It's action.
It's action.
Which is what we like to see.
That's what we like to see.
So final verdict
well,
is GrafTech.
Yeah.
A company worth watching.
Oh, definitely worth watching.
Okay.
They're doing things differently. Challenging the status quo.
Right.
Embracing new opportunities.
And those are the kinds of companies.
Those are the companies
that tend to
outperform.
Outperform over the long haul.
Over the long haul.
Yes.
Okay.
Yeah.
Now, before we wrap up.
Okay.
Completely.
Yeah.
We always like to have a little fun.
A little fun.
And throw out
some. Not financial advice.
This is not financial advice.
Trade idea. Trade idea.
Inspired by.
What we've uncovered.
What we've uncovered.
In our deep dive.
Deep dive. So.
What crazy, but maybe not so crazy.
Okay.
Trade idea.
Trade idea.
Do you have for us today?
Okay, here's one.
Okay.
A little bold.
Okay.
But hear me out.
I'm listening.
Okay.
Yeah.
What if we entertain the idea of a long-term bullish bet?
A long-term bullish bet.
On GrafTech.
On GrafTech.
Yeah.
Okay, so a contrarian play.
A little contrarian.
In a beaten-down sector.
Yeah.
But what makes you think they have what it takes to not just survive, but thrive?
I think you got to go back to what we've learned today.
Yeah.
Aggressive cost cutting, improving profitability.
Right.
That financing transaction gives them breathing room.
Right.
Financial flexibility.
Yeah.
And then, of course, that long-term growth potential.
A massive growth potential.
Massive growth potential.
That we talked about.
From steel and EVs.
From steel and EVs.
That's right.
So it's like they're firing.
They are.
On all cylinders.
All cylinders.
They're not just cutting costs.
No.
They're positioning themselves for a future.
For the future.
Where demand for their products could skyrocket.
Skyrocket.
And here's the kicker.
Okay.
As GrafTech successfully navigates
downturn
and starts
executing
growth
strategy,
we could see a significant expansion in their earnings multiple.
Earnings multiples,
Which means stock price goes up.
Stock price goes up.
Potentially.
All
right. You've got my attention.
But remember, this is just an idea. It's important to do your own research.
Always do your research.
And make informed decisions.
Informed decisions.
Based on your own circumstances, your own goals.
Yeah. We're just here to spark the conversation. Get you thinking. And maybe help you uncover some hidden gems in the market. Sometimes the most outrageous ideas turn out to be the most profitable.
That's right.
So we'll see what happens with GrafTech.
At GrafTech.
All right, folks. That concludes our deep dive into GrafTech International. We hope you enjoyed
it.
This roller coaster ride.
Through Q3 2024.
Earnings call. This is Talk Tickers. Your trusted guide. To understanding the complexity of earnings calls. And uncovering those hidden gems in the financial world. Until next time. Stay curious. Stay informed. And keep those trading ideas flowing. We'll see you on the next deep dive. It's part of the allure, right?
It is.
Keeps things exciting.
Keeps us on our toes, for sure.
And that's why we do what we do here in Talk Tickers.
Yeah, we love it.
We love diving deep into these earnings calls.
I do.
Sifting through all the noise. Uncovering those hidden gems.
For sure.
And GrafTech. They've presented us with a pretty intriguing one today.
They have.
They're facing a tough industry environment.
Yeah.
But they're not just sitting back, waiting for things to get better.
No.
They're taking action.
Yeah.
They're making bold moves. They're investing in their future, and they're positioning themselves to capitalize on these long-term trends.
Long-term trends, for sure.
So they're playing the long game. Which, as you know, can be very rewarding. If you're patient. So to wrap things up.
Okay.
Would you say that GrafTech is a company that deserves a spot on our listeners' watch lists?
I would say definitely worth keeping an eye on.
Okay.
They're a company that's not afraid to think differently. challenge the status quo, embrace new opportunities. And those are the types of companies that can deliver outsized returns.
Big returns.
Big returns over the long haul.
So if you're looking for a company that's bucking the trend.
Bucking the trend.
That's innovating.
Innovating.
And that's setting themselves up for future growth. GrafTech might be.
It might be.
The one to watch.
To watch.
Yeah.
But of course. This is just our analysis.
Our analysis.
Always do your own research.
Always do your own research.
Consult with a financial advisor.
Financial advisor.
If needed. And make sure you're making investment decisions that align with your
goals.
Risk tolerance.
Your risk tolerance.
And your financial goals.
Financial goals.
All right. And with that, we'll wrap up this deep dive
into GrafTech International. We hope you found it.
Informative.
Insightful. And maybe even a little bit inspiring. Thanks for joining us.
Yes, thanks for joining us.
Here at Talk Ticker.
Your
go-to source. For in-depth analysis. Of earnings calls.
And
the latest trends. Shaping the financial world. Until next time. Stay curious. Stay informed. And keep those trading ideas flowing.
We'll
We'll see ya.
See ya.
On the next deep dive.